Jason Gammel, he's a senior analyst at Macquarie, where he has an outperform rating on BP. Why is that?
We think the stock is highly undervalued right now, and I think as they return to operations, particularly in the Gulf of Mexico, but also in the North Sea and Angola, we're going to see a higher level of profitability. And I think the free cash flow is actually what's going to be the key financial driver for them moving forward.
To what extent do you think the ongoing legal uncertainty, the upcoming civil litigation in February, how much could that weigh on profitability going forward? Because, of course, the costs could seriously mount into the billions of dollars if they're found to be guilty of gross negligence.
That's right, and it's about 60 pence per share of incremental value loss if they were to be found guilty of gross negligence. I would expect that if Department of Justice were to pursue gross negligence, though, it would be a very lengthy litigation process. I think everyone concerned would just soon see this get settled.
Are they going to be able to get all their operations up and running by the end of the year, given that in these earnings we can already really see the cost of their inactivity in the region?
I think it's going to be a challenge to get up to 5 rigs running in the Gulf of Mexico, but I think you had significant progress reported just on Friday when the BOEM did approve an exploration plan for their Casquita field, which could be the largest field in the Gulf of Mexico, deep water.
And what about the divestment? We're looking at asset sales now of $45 billion. How's that going to impact the company?
Well, it's going to be incremental production that you lose. Now, $5 billion of that we expect to be from the refinery sales that they've already announced, but $10 billion of incremental downstream divestments probably going to take about 100,000 barrels a day out of their production levels if it all comes from the upstream.
One thing that I suppose investors are feeling a little uneasy about right now is the share price, that even if BP is making progress when it comes to getting US regulatory approval to start drilling in the Gulf of Mexico again, even if they are making settlement claims with other people, other companies that were involved in the Gulf of Mexico, for example, the Anadarko petroleum settlement, despite all of that, it's not being reflected in the share price because they're lagging behind their rivals.
They're lagging behind right now, but the way we evaluate it, this is a stock that we think is worth closer to 6 quid than it is to 4 quid. And I think that you actually get a nice move here as you start to reestablish producing operations, as you get settlements with companies like Anadarko, and as you get more drilling plans approved in the Gulf of Mexico. We think those are really the key operational factors.
I suppose there is this sense of frustration that, well, you have dividends still at half what they were, 7 cents a share. There were no surprises there. That's pretty much what we're expecting, but half what they were at pre-crisis levels.
Right. I think if you read through the entire statement that they put out today, they're talking about having about $5 billion of incremental cash that potentially is available for returning to shareholders. That would actually be about the amount of dividend increase that you'd need to get back to where it was before. But my expectation is that they wouldn't go to that level, that they'd want to keep some financial flexibility. So you'd see an increase in the dividend, but a lot of it could go into repurchases as well.
Well, you know, Jason, we've also had earnings from BG Group. I know that you've been staying across that as well. Yeah. And you actually have an outperform on this stock and a price target of over £17. And, well, if we just take a look at where the stock is currently trading, you can see just around the £13 mark. So tell me, what makes you so positive on this, Jason?
Brazil. And I think that Brazil is going to make BG the most exciting growth company in the integrated oil sector over the next 7 or 8 years. It's a huge resource. It's completely undeveloped right now. And there's considerable progress being made towards actually converting it into production and, more importantly, cash flow.
So when are they going to start reaping the benefits from that?
You're really going to see it in terms of positive cash flow in 2013. And then as you look to 2014, that's when the ramp really kicks in.